All right, welcome back to the weekly rebalance, number 10, I believe, this
Yeah,
week.
you got it.
hmm Coming along. Government shut down. Now it's opening. All kinds of stuff going on in the world.
Yeah, been an exciting time.
Yep.
Sure. Were
I
you
heard,
surprised? Oh, no,
oh, go
you
ahead.
going
No,
ahead.
you go ahead. Go ahead, Nick.
Yeah, I don't know. Were you surprised by coming in on Monday and seeing that eight Democrats, I think it's eight, Democrats had changed their mind on the shutdown, and that's basically the impetus for us expecting them to reopen. Were you surprised by that?
I was a little surprised by that. Yeah. Um, I don't know. It felt like it was just going to go on forever. In my opinion, it's embarrassing on both sides.
Yeah,
Just the fact that, and you know what I found funny was that both sides are um, basically the congressmen and senators. They're all getting paid during this,
I know.
but all the workers are not. And I just thought that was ridiculous. I was suggesting this to my aunt and uncle the other night. I was like, you know what would fix this real quick is if they stop getting paid as soon as the
Yeah,
shutdown, as soon as you're shut down, oh, you don't get paid. If you don't get it back open within what, 1 week, you all lose your jobs and we vote for new people.
yeah. I guess it depends on which portion of the pay. If you're talking about alleged insider trading, I'm not saying that, but like allegedly, if you were to do that, that would be a decent portion of your salary, not necessarily what you're getting paid by the government. So I don't
That's
know
right.
how we could cut that off.
I don't know. But to close the stock markets. Well, and the thing is, what's interesting? So this is
Yeah,
what I
let's
I
close the
was just
stock markets. I love that idea.
close the stock
let's
markets.
let's go on vacation.
Government shut down, all stock markets closed, we're on vacation, and we're still getting paid.
Yes, yeah, no, that's the big thing. Yeah, yeah, I'm all for let's shut down the stock markets, but we still get paid. Yeah,
Yeah.
let's do that.
All portfolio managers, advisors, we all still get paid, but stock market's closed. We're not doing anything. Sorry, you can't move your money, can't trade, can't buy, can't sell. Sorry, just shut down.
It's the way it goes.
Only part of the world that can shut down and, you know, still somehow get paid.
Yep.
Imagine if we shut down and we're just like, we expect everyone to come into work still. Please come into work. We're not paying you. No.
Yeah.
But I mean, but the executives, we're going to get paid still because, that's just not possible. But
That
all
private
you
jet
other
doesn't fill
people,
itself up.
oh boy. Yeah, it's crazy. Closing the stock markets, that'd be a good one. That could cut off their source of income after you cut the insider trade. Can't insider trade if the stock market's closed.
Yeah, that's a good point. That's an interesting subject in and of itself. If there were to be such behavior going on, what do you think the solution is? Maybe just like a brief stopping point while we go through the government shutdown, but like, what do you think the ideal solution is?
I to shut down insider trading.
Yeah, if it happens.
I think you force them all. They get a tax-free, they can basically any individual stocks that they own, they can convert it into ETFs with no tax issues, and they have to own ETFs from there on out. They cannot own an individual name. They can own is index funds, mutual
I,
funds or
I
ETFs.
I like that. The only thing that I think about that would need to go along with that, because you can time it too, like
hmm
directionally. So I don't know. I guess maybe there needs to be some sort of lockup period after the purchase, or just truly passive. You're buying and holding this
Yeah.
index thing that's going to do whatever. Because I totally agree with you. I think that's probably the solution.
Yeah.
But
They should be forced to index. Yeah. It wouldn't necessarily doesn't have necessarily have to be an ETF or mutual fund, but forced to
they
index.
could direct
They
index with
cannot
us.
trade.
They could
Exactly.
direct
We'll take
index
all of
with
them as clients.
please, please.
We'll take all of your money. Yeah. I think they should have the opportunity to have a tax-free sale of any securities they own, and then they can index have forced to index from there on out. That's part of your duty serving your country is you can't. It's because it
Just
should be about serving your country, not about,
day trading.
getting, not about date. Why, if you are serving your country as a congressman or a senator or whatever, are you day trading? Why do you need to day trade?
I've
And you
always,
have access
yeah,
to so much information.
I've always wondered about that and how that, you know, works. Is it they communicating with someone else, and that's thematically playing out? I don't know. Again, if it happens, how is it being communicated? Who's making the clicks? It's just I find it very interesting. But that's a
Yeah,
side note. That's a side note.
yeah, it is very interesting, but I don't know if we're going to solve that. But I do find it kind of funny though, because so this was interesting to me, and I think we all know this, but it's a good reminder. The government shutdowns do not have major impacts on stock markets. Like they just don't. I mean, this during this period, the market is down about 1%, but no, it's largely irrelevant related to the actual shutdown. During 2013, that was a 16-day shutdown. The market was up like 3%. From 20 in the 2018-19 shutdown period, which was like 35 days, the market was up almost 10%. And
Yeah.
it's just not the markets do not care, which I find kind of funny. If you were in a, if you were the typical company and all of a sudden you use, since we're going to talk about Meta and Spotify and whatnot, if Mark Zuckerberg all of a sudden decided that Facebook was shut down, we're not operate or Meta was shut down. We're not operating anymore. We're not paying any of our employees. I'm getting paid still, but sorry. Imagine what the stock price would do.
Yeah.
Imagine how that would affect the market around him. And
Yeah.
but government shutdown, nobody cares.
Well, yeah, and it's interesting too. I mean, just watching even treasury rates.
Hmm.
Theoretically, you would expect if you're going to see a direct bleed through, that treasuries would be one of the first spots to see it. And there was definitely
Hmm.
some movement, but it wasn't shocking or something you could really point to and say, "Oh, that this is a huge detriment to the market because the government shut down." So, anyways,
Yeah,
it's an interesting time. I'm wondering if so. This was the longest one on record, right? By a decent little margin.
it was.
Well,
Yeah,
it
it was the
still
longest
is.
on record.
It still is.
Not
I
open yet.
guess. Yeah, we're not back open yet, so we're kind of counting our chickens before they're hatched. But if it were to continue, because you know, in the past, I think they've been within 30 days, with the exception of COVID or not COVID. Um, was it 2022 or
I think
2019?
2018, 2019 was
20,
35. Yeah, that was 35 days.
yeah. So I know that we saw it with SNAP benefits running out. That would impact a lot of consumers in a meaningful way, and also with getting pay held up, because pay for soldiers I know has been one of the things that usually gets passed and didn't this time.
Hmm.
And I'm wondering. Luckily, I think we're coming to the end of this, but like, I'm wondering if maybe that tune would have changed if it was another 20, 30 days and we started to see
Yeah.
some revenue changes by consumers changing their habits because they're not getting paid and they're not getting benefits
Right. I
potentially.
think, yeah, yeah, kind of unknown territory once you get longer and longer. Hard to say. The estimate is about GDP gets hurt by about 0.2% per week that it's shut down. So it definitely has some effects. Stock markets do tend to look past them, but there are some lasting effects in the economy, like GDP losses. Those, you don't get those back. I think sentiment can be also harmed. I think sentiment was already plunging or already falling, but sentiment is now near the lows from the 70s. So not a not a positive thing. I don't think that's all coming from the shutdown, but certainly it certainly doesn't help. And the longer it goes on, the worse it gets. But yeah, kind of interesting that stock markets tend to look past it historically, but there are some lasting effects in terms of just consumer sentiment, GDP losses, that kind of stuff.
Yeah, for sure. For sure.
So
Definitely.
hopefully it's over soon. They're going to vote on the 12th, right? Tomorrow.
Yeah, I think you're right.
So futures markets up a little bit with that optimism, which is good. But again, kind of a non-story long term. It's just a little blip. Very negligible long-term effect on equity markets, but we'll see what happens going forward because we have some questionable economic ripples presenting themselves here in 2025 and going into 2026. So we'll see what happens.
Yes, for sure. We'll get some of that data coming out again, which will be nice.
Yeah, yeah, for sure. Missing data was a problem as well.
Definitely.
Yeah.
Definitely. Definitely.
Anyways, well, not for this. Not stock market did well, started cut recovering recently, and we'll see what happens. But um, those yet to be seen.
Absolutely. We'll be keeping an eye on that for sure. I did notice
Yeah.
today there was some good breadth. I mean, we saw Nvidia pull back with some divestment from one of their partners, but I think largely the story was that money's going back into Nvidia. So I thought that was funny. But today was an interesting one to watch because we've seen just a interesting story with breadth in the S&P 500 recently here. Just certain days, a minority of the index is down, but the index itself is down relatively meaningfully. And then on a day like today, the majority of the underlying positions were up. And albeit we did finish up, but earlier in the day, even though we had the majority of companies in the positive,
Mhm.
because Nvidia was struggling in the early morning hours, saw a negative return on the index, at least for a little while. So some interesting stuff
Yeah,
going on with breadth there.
yeah, definitely, definitely. Those names at the top, they have been led for so long. I think that that would be a healthier market if we actually had some breadth. I mean, hopefully we continue to get more and more breadth. That's what we're looking for as a sign of health. But it's really that's the like we've talked about this several times on the podcast, but and many times offline. It's just one of those things that it's hard to grasp that, the stock market is driven by at the moment like 10 names. Um,
Yeah,
so you don't really have a lot of diversification and stuff in there. And yeah, I don't know. Like you want to cut you had some really interesting information today about some of these large players, but they're, you know, again, maybe it's just they're more ingrained in the economy than we realize, but they're definitely it's a lot of concentration risk there. And I would like to see some more breadth to see a little bit healthier market.
definitely. I think that would ease some concerns for sure.
Yes, yes, for sure.
Well, yeah, do you want to get into some other stuff? I don't really have anything all that technical today, just some stuff to talk about related to podcasts here. So we're gonna get meta.
Yeah. Let's do it.
All right. Well, I just wanted to talk through this really quickly. I saw some news coming across about this and just took a look at this relationship historically, and it's kind of interesting how it's evolved. And I think it speaks to just the changing nature of these two companies overall over the past 5 years. And really, what I wanted to talk about today is the partnership between Spotify and Netflix. Netflix is going to start distributing video podcast content from Spotify. So it's going to be another
Okay.
spot for people to access that sort of content. And I think there's a number of benefits to that, specifically for some of the proprietary or the owned podcasts by Spotify that they, can control the distribution of. In particular, in the sports world, I know a lot of analysts were particularly excited about that because Netflix has been trying to move into that sports broadcasting space for a while. They've done a few live events to varying degrees of success, and they've had some technical issues, that sort of thing. But this seems like a pretty cost efficient way to get into the sports world more and more and have people coming to Netflix for information about their favorite sports teams, that sort of thing. So I'm trying to, I'm not personally familiar with these podcasts, but apparently they're pretty large. The Ringer is one of them that's coming to Netflix. And then the Bill Simmons podcast is another one that's coming to Netflix that's going to be viewable on there. So you can see the video content along with the audio that the podcasts are typically known for.
Right. Yeah, it's interesting. Like Netflix is well, the media landscape as a whole has changed drastically over the last decade. Podcast, YouTube, Netflix, and other services like it have really taken over. I don't know if I mean it's changed for me too. I tend to like podcasts as some of my major form of entertainment.
Yeah.
I like Netflix. It's easy to watch 20 minutes of a show and you can watch it anytime you want with no commercials. It's pretty nice.
Oh wow, you pay for
Yeah,
the no commercials tier.
I do. Yeah, it's like
Wow. Oh
$25 a
wow, look
month.
at you.
There's no time for commercials. Yeah. I like it
I
though.
don't
I
pay
think
for the
it's
no
neat.
commercials tier.
You don't?
I don't.
Come on,
So
Nick.
I'll be
Don't
getting
be cheap.
interrupted. I'll be getting interrupted. But
Come on, don't be cheap.
I don't really watch Netflix all that much. I'm excited for Stranger Things was supposed to come out right before Halloween, and then they delayed it again. I feel like that's the constant story with that series, but I
Mhm.
don't know. There's not like a lot that I get excited about on Netflix, if I'm being
Yeah.
honest right now.
Well, I
But
think that's the challenge, right? For
yeah,
these names is a lot of people will buy the service just to watch Stranger Things and then they're done with it, right? Or
yeah,
whatever. But who knows?
yeah,
How are they affected today? Let's look. How did Spotify and Netflix do today? Netflix has done, you know, let's see. How were they affected today?
yeah. Today, I don't know that if there was anything too crazy. This news, by the way, was announced a little while ago. I think
Okay.
this was towards the end of October, sometime around there. So
Okay.
nothing too crazy. The thing that I took a look at is, Spotify hasn't been public as long as Netflix has. So basically had these both start at the same time, which is the IPO date for Spotify. But I think one of the interesting things is how closely these two have performed over the past 5 years, give or take. And that all makes sense. They're both in the same sector. They're relatively similar in the whole scheme of things. They distribute media. They both have a subscription service, that sort of thing. I was just particularly surprised by how correlated these two were. Just down to watching this chart over the past 5 years, they're neck and neck the whole time, and they trade off who's leading. Right now, Spotify's in the lead in terms of return since the inception date or the IPO of the Spotify, but
Yeah.
just by a little bit.
Interesting. Yeah, I guess they should be correlated. How do these correlate to the big giants well, I guess they're not Netflix is the giant, right? But how does
Yeah,
this correlate to some of the other some tech companies like Meta and others?
relatively similar. Still
Interesting.
staying in line
What
for
about
sure.
what about Disney? Disney's an interesting one.
That's another good one. That's a pretty close competitor.
Hmm.
Oh,
Interesting.
relatively flat. I mean, we would expect a decent amount of correlation between those names
Hmm.
just given how they are. But I don't know. I was expecting to see one standout winner. I mean, Netflix has
Hmm.
performed very well since its IPO, but since Spotify is IPO, very similar in terms of
Yeah,
performance. I was expecting a runaway winner.
right. I wish that we could see the YouTube data specifically instead of
Just
just
Google.
the Google. Yeah, because if you add Google in here, it's like we can look at it, but and YouTube is a big part of Google, but it's not all, it's not a direct comparison there. Um, do you wonder if some of these names like what will like YouTube is part of Google, right?
Mhm.
Do you think that there's going to be more consolidation in the space where you start to see other tech companies try to like gobble each other up to vertically integrate all of their systems? Like, will Meta try to buy Netflix, right? Maybe that's not the good analogy, but would Netflix try to buy Spotify, right? Do
Yeah,
you think that you see stuff like that
I think
occur,
it's
or do you think you see the opposite?
I think it's definitely an interesting question, and it's particularly related to the subject today because Netflix has decided to partner with Spotify. They haven't decided to buy it, and it's been very
Right.
cost efficient for both parties. They both get the exposure that they're looking for, and they get the content that they're looking for, and they're driving foot traffic to their platform. So I don't know. It seems like with these platforms themselves, if they're not directly competing with each other like Spotify and Netflix, it seems like they're more willing to cooperate and do some sort of a joint project where they're being like the premier partner of Netflix is Spotify and vice versa, that sort of thing. At this
Yeah.
level, it seems like they're more interested in partnering with each other as opposed to buying each other up. I think
Hmm.
there's more interest in purchasing like content. Like Warner Brothers, I know owns a lot of particular media that a lot of streaming platforms would be interested in offering, and there's a lot of potential talk for purchases here recently. So I think on the content side of things, I see more trying to gobble each other up and amass the biggest library. But in terms
Yeah.
of like these platforms themselves, I don't know that they have interest in owning each other.
Yeah. Yeah. Very. It's changed so drastically. It's and you then you loop in the what about the legacy media companies like Comcast, Fox,
Yeah,
those type of things. They're very. I would say, there's still a large part of the population that gets entertainment from a Fox or a CNN or whatever the case may be, Comcast.
yeah,
They're that's more of a cable company, right? But
yeah,
all of these media companies, I'm kind of lumping them in. There's like the legacy side of things, and then there's the new side of things, the Spotify, the Netflix, Disney Plus, the streaming services. And it's real, I think we will be in a completely different environment 10 years from now. Everything will look completely, it feels very unsettled now as an investor in the space. But if you had to pick one to invest in, the legacy media or the new, what would you pick?
I mean, I think I would have to go with new, just because the momentum's going that way. I just find it hard, like particularly with a Comcast. I find it hard to see people sticking with that, especially like YouTube TV is a great example. My parents are a good
Mhm.
example of this. They went from traditional cable to YouTube TV. And now there's like a lot of fighting going on with sometimes you lose a channel, that sort of thing. And that's really annoying. But just, I don't know. In my personal life, I definitely tend to lean into more of the streaming platform, being able to watch stuff when I want it, as opposed to just linear TV. I don't know. I don't have the desire to turn on cable anymore. I have Bloomberg
Yeah,
TV going day to day, but that's just like a streaming thing I put on the Roku. So
yeah. Same. I mean, I don't have any. I don't have. I used to have Spectrum, canceled YouTube
yeah,
TV now. I even got my parents they're on YouTube TV now. It's just more convenient. So I think the days are numbered for those legacy ones. I think they may end up being acquisition targets, like you said, for their content, for the creators that are captive to those networks, right? Because there's still a lot, but that's going to dwindle. Think the younger generations, they're getting their content in different ways. They're getting their
yeah,
content through podcasts and not through watching CNN or Fox.
yeah,
It's just not how people in their 20s, 30s, and 40s are getting their information anymore. So
yeah. I think there's definitely there's some
changing.
saving graces for those companies like Fox, because they have their own streaming platform, they have their own like subscription service, that sort of thing. So they're kind of like leaning into it a bit. But I
Right.
tend to agree with you. It just seems that's the way things are going in my personal life. I just know that's more convenient for me. It's nice to be able to have it on the go,
Hmm.
which I know some traditional cable companies were starting to offer that sort of thing, but I don't know. Just
Yeah.
it's definitely been interesting the way that's been going. And I think too, now this kind of ties back to the Spotify Netflix relationship, but I wasn't fully aware of this, but this partnership actually started back in 2021.
Hmm.
And
I didn't know that either.
yeah, well, let me ask this. When you think of Spotify partnering with Netflix, who do you think is sending content to who? Like these days? Like who would you guess?
I would guess Spotify sending content to Netflix.
Right? That's kind of what I thought. But it
Yeah.
started as Netflix sharing content with Spotify. And it was
Interesting.
another way for people to engage with their shows that they were watching. So they had,
Hmm.
playlists from famous TV shows that were popular at the time, behind the scenes kind of footage, interviews with the actors, that sort of thing. And that was offered on the Netflix hub and Spotify. And there were a number of other partners to do this too. I think HBO, Disney did something similar. I think even with Spotify, even further back. But when this partnership was initially started, it was Netflix sending content to Spotify, not vice versa. And
Interesting.
from what I saw, it was pretty successful in keeping people engaged with the Netflix brand and the programming that they were offering. So
Yeah.
it was relatively successful. Um, but fast forward to today, now we're getting content sent from Spotify to Netflix. And I think that's just a sign of how fast things are moving. Like on the day to day, I don't use Spotify, I use YouTube, but I consume a lot more Spotify, YouTube kind of content than I do Netflix. Like
Yeah.
Netflix is at night, I'm going to sleep, I'm watching something. During the day, I'm listening to, podcasts while I'm
On
working.
Spotify or something
Yeah.
like that. Yeah. Yeah. Exactly. I mean, I do the same. Like if I'm driving around or something, I'm listening. I oftentimes I'm listening to a podcast. That's where I get a lot of my news information nowadays. I
Yeah.
don't turn on. Yeah. So very, yeah, interesting. Like we've said, the landscape there is changing drastically. And I think, there's an interesting analogy here. I know we're both car and watch fans, right? What's
Yep.
interesting to me there's a similar shift happening here. Completely different industries, obviously, but you have the cars that were popular, with let's say 65 to 75 or 80-year-old people now.
Yeah.
Let's say cars that are popular in the 50s, 60s, 70s, 80s. They had this huge use case, and then now those people are, for lack of a better term, dying off, and or don't have the time to spend on the cars. And then they start spending, all of a sudden this new group of people have money to spend on collectible cars or fun cars. It's kind of shifting in the media landscape as well, where all of a sudden this new group of people is now figuring out where they want to spend their time listening to media content, and they're consistently picking podcasts.
Yeah.
Completely new form of entertainment. Really wasn't even around, not that long ago. Podcasts didn't exist not that long ago, and short form content didn't exist that all that long ago. And
Yeah.
now that is the new phase. It's likely, I wouldn't, like I said earlier, I wouldn't be surprised if, similar to how like a Model T is not that desirable of a collectible item anymore and not used in any way anymore, that you fast forward, I don't know if it's a decade or 2 decades or 3 decades from now, but likely you've shift into a completely new form of media content, and the people absorbing it are changing them. They're changing their preferences.
Yeah. That's interesting. Now, if we could get like a 1970 Roadrunner to start getting cheaper, I'll get pretty excited about that. But I don't know if
Yeah.
that's going to happen.
Yeah. Well, yeah. Well, there are certain things that stand the test of time, right? So that's
Oh
the
yeah, yeah.
finding that is the key, right?
Yeah.
Like we were talking about last week. What stands what's the oldest company in
Oh yeah, yeah. Bank of New
the
York.
oldest? There you go. Hey, s- banking. Someone's got to handle your
Yeah.
finances, right? Hey,
Speaking of which, this is a great segue into my trivia question for the week.
oh, you got a trivia question? I
Yeah,
didn't have
yeah.
anything this week.
Oh
I'm
my
sorry.
God, Jen, this is unacceptable. But this is a perfect segue, so I'm going to do this now. We can come back to that later if we want, but this is perfect.
Sounds good.
All right. Here's the question. What percent of the world's currency is physical right now? Like cash.
Actually, you could cash it in. Like how much cash is out there for all
Yeah, yeah, like
currencies
actual
relative to
cash,
the.
physical, as opposed to it's on a hard drive somewhere, ones and zeros, that sort of thing.
Oh boy, it's really low. It's going to be surprisingly low. Oh, I'm gonna guess like, boy, I have no idea.
I
I've
know,
never looked into that. When you guessed this before you looked it up, were you close?
not really, no. I guess low too. I guess low too.
Was it
I don't know if I
lower
should
than you
tell
even guessed?
I
I'm
don't know if I
I'm
should
I'm
tell
trying.
you that.
Okay, okay, okay. I'm gonna guess 5%.
Okay, you were lower actually. 8%.
8%. Okay.
8%. This is the world as a whole. And this is according to I think this was SoFi. So
Okay.
but this is the world as a whole. So I'd imagine the US is probably more scarce. It might even be lower.
Probably, yeah.
But at the world level, 8%. So somebody has to hold on to 8% of your money physically. And then the rest of
Yeah.
it, they just need a hard drive somewhere.
Yeah, that's right. Funny. Yeah, definitely. They're perfect. That was a good segue. That's how things have changed. So,
Yeah.
hey, will things change in another 100 years for Bank of New York, or they still be around?
Yeah. I mean, you got to put your money somewhere, even if it's ones and zeros. Somebody's got to keep it safe. So I would have to
Yeah.
guess so.
Yeah, I would guess so too.
Could you
I
imagine going
think that
into
the
a bank?
media
Oh,
going into a bank vault and
going
just
into a
giving
bank
your
vault and there's no money. It's just like all hard drives. And
that's essentially what
like
it is.
here's your hard drive. Yeah, I mean, I'm sure, but like I'm just imagining, I've never been in a bank vault before, but I'd imagine just like stacks of cash. Uh, But
Yeah,
that I
just
mean,
hard
I'm
drives.
sure they have plenty of cash on hand and everything like that for daily withdrawals and everything. But it is kind of funny to think that really,
Yeah. Well, speaking of evolving tastes and how things work in media, going the same thing in banking. What do you think? Uh, how soon before cash and coins are just not even used? I mean, you don't even really need them anymore. Like, how often do you? The only time I need cash is if I'm like tipping somebody at
yeah,
like not a restaurant, like tipping somebody like a valet or something like that. That's
yeah.
the only time I actually need cash.
I don't know. It's a great question. I very rarely use it myself. Um, I know that I think the penny is a great example of this. It costs more to make than what its monetary value is that they assign to it. Um,
Yeah,
so it's a cost to produce. I I don't know. I don't know that I could ever see getting rid of it entirely,
yeah.
but maybe we go from 8% to 2%.
It's possible. We'll see. I think there might be a day sometime in the not so distant future where we might have zero cash at all, and it's just not something that anyone uses. But maybe not. Maybe not.
Yeah, I don't know. I don't know. It's always a blast from the past to go to one of those restaurants where they only take a check or they only take cash. And you
I
go
know.
in there and you're all concerned that you have cash. I never carry my checkbook with me either, so
Yeah.
so, so I don't know, but there's still places like that out there, and I don't know until you can get your barbecue sandwich without handing over a $20 bill. I think $20 bills are here to stay.
Yeah, well, maybe true. I think they're here for a while, but I think there may be a day someday where you just, I mean, think about it. You can pay with your phone now in
I
most
know that's
cases. You just
crazy.
tap your phone. I actually use that a good amount, but
I haven't done that
yeah,
yet. I haven't done that yet.
we'll see. Apple Pay, yeah, it's wonderful. Um,
See, my
just
problem is
tap.
my whole family, we share an Apple ID because I was the first one to get an Apple product when I was like a little kid. I got an iPod.
Yeah.
And then as my parents got iPhones, they, they just bundled it all under my Apple ID. And so now we're all
Yes.
like tied together because we all have apps and stuff that we bought. We've got like all of our information stored on there, and it creates this like incredible nightmare. But if I were to put my credit card on my phone, we would end up paying with each other's credit card all the time.
Well, get somebody else to put theirs on there, and
So
then
that's a
leave
problem.
yours off.
That's a me problem, but that's the reason why.
That's funny.
That's
Oh
the
boy,
reason.
that's funny. Well, get one of them to put their credit card on there, then you can just start
Yeah, that's
using their
actually a
credit
great.
card.
I'm going to call my dad right after that. Right after
Yeah,
this, tell him to put his card on there because I want to try it out.
yeah. Call your dad or your brother, or one of those two.
Yeah, Tony would be. Yeah, that's the way to go.
Yeah, it's funny.
That's.
Awesome. Well, I think that's good. Should we? That was a good podcast number 10.
I agree. Yeah, I think we can call it here.
Should we wrap it up?
I think we can wrap it up.
All right, sounds good. We're doing these all in one take, so get the real version here. That's like that. What's that? Is it Matt Farah? This
Yeah.
is YouTube videos where he does his does a review. He calls it the one take.
Yes.
This is truly a one take. There's no editing. There's nothing. I think Eva puts a little
Yeah.
uh,
Disclosure at the beginning.
snippet at the beginning and the end. That's it. Every
Yes.
other than that, this is a one take podcast.
Ethan Unchained.
Unchained. Yeah.
Yes. Yep. All
All
right. Well,
right.
I think
Well,
this concludes our one take.
all right. Sounds good. Well, thanks everybody. We'll be back next week.